All right, let's take a deep dive into IDFC First Bank's Q3 FY25 results. We're going to be looking at their earnings call recording, their investor presentation, and their press release. We want to get the big picture, how
Yeah.
they do, where are they now, and what seems to be on the horizon for them. We'll be focusing mostly on the big picture numbers, the things that are going to be really moving the needle for them.
Well, one thing that jumps out right away is the bank's growth since the 2018 merger, right? I mean, they've had a pretty big focus on retail banking, and it seems to be really paying off.
Yeah, the growth numbers are pretty impressive, like 5.9 times growth in customer deposits overall. And get this, retail deposits are up by 17.4 times. Plus, their loan book has expanded by 2.2 times. Pretty clear they're making a big play in retail.
Definitely. And that aligns with their goal of becoming a full-service universal bank. They've been busy launching new products and attracting a wider range of
So
customers.
big growth, sure. But how's their bottom line looking?
Well, that's where things get a little bit interesting. Microfinance or MFI lending, that's been a bit of a pain point for them this quarter. There's been an increase in delinquencies in this segment, which has bumped up their credit costs. And that's affecting their profitability, obviously.
Yeah, that's not what you want to see. Can you give us a sense of the impact?
Sure, for the first 9 months of FY25, their credit cost for MFI lending is sitting at around 8%, and that's quite a bit higher than their overall credit cost. The CEO actually even used the term double whammy in the earnings call to describe what's going on. Rising credit costs, any declining income in the MFI segment.
Oof, yeah, double whammy. So why were they so invested in MFI lending in the first place?
It was definitely a strategic decision driven by a couple of things. One, it helped them hit those priority sector lending requirements. Those are those PSL requirements you hear about, mandated by the regulators in India. It basically encourages banks to lend to certain sectors that are considered important for development, like agriculture and small businesses. Second, MFI loans traditionally came with higher interest rates, so they were, or at least they were supposed to be, pretty profitable.
So basically, a tougher economy plus the inherent challenges in MFI lending, they all kind of came together to create a bit of a perfect storm for IDFC First Bank.
Exactly. And it raises an important question. How worried should we be about this whole MFI situation? Well, the CEO has been saying that these MFI problems are kind of overshadowing the solid performance they're seeing in the rest of their businesses.
Okay, so it's not all doom and gloom then.
Right. It's important to remember that MFI loans only make up about 4.8% of their total loan book. The rest of their portfolio, the lion's share, is doing pretty darn well.
So what's looking good? What are the stars of the show?
Well, their home loan segment, their vehicle loans, their credit card business, they're all showing stability. Plus, if you look at their vintage analysis, that tracks how loans perform over time. It really shows a positive picture for their core lending portfolio.
And what does that tell us?
Well, it suggests they've got some solid underwriting practices in place. They're doing a good job assessing risk before issuing loans. It points to a fundamentally healthy core business, for sure.
Okay, so that's encouraging. Almost 95% of their loan book is in good shape.
Yeah,
That's got to count for something, right?
absolutely. But there's another piece to this puzzle, their operating costs. Right now, their cost-to-income ratio is sitting at about 71.8% for those first 9 months of FY25. And that's something they need to watch.
What exactly does that ratio tell us?
Well, basically, it measures how efficiently the bank is running. A lower cost-to-income ratio generally means better efficiency. The bank knows this is an issue, though, and they've got a plan to tackle it.
All right, so what's their plan? How are they going to address this cost situation?
Well, they're focusing on operational efficiencies, leveraging technology to cut costs where they can. And they're pumping the brakes a bit on branch expansion. They're projecting that operating expense growth will slow down to around 13% in FY26, compared to the 18.2% growth they saw in those first 9 months of FY25.
That is a significant slowdown.
Yeah.
But can they actually achieve that while they're still trying to grow the business?
Well, that's the big question, isn't it? We'll have to keep a close eye on how things progress over the next few quarters.
This has already been super insightful. But before we move on to part two, I got to ask you about something that really jumped out at me, the near and dear test.
Ah, yes. The near and dear test. It's a pretty interesting concept, isn't it?
It really is. Tell me more.
Okay, so the basic idea is that any product the bank offers should be so good that the employees themselves would be comfortable recommending it to their friends and family.
Oh, I love that. That really says a lot about their commitment to ethical banking, wouldn't you say?
Yeah.
To actually being customer-centric. I mean, it really resonates with me.
It's a powerful concept for sure. In a world where financial products can feel really complicated and sometimes kind of shady, It's a simple but really profound way to assess a bank's values. But we'll dive more into this and the bank's future in part two.
Yeah, it really gets you thinking, like if they're really committed to only offering products they'd recommend to their own family, that's got to say something about their integrity.
It's like having a built-in ethical compass, right?
Yeah,
Guiding their product development and all their business practices.
exactly. And it's not just talk either. They've actually taken concrete steps to match their actions with this whole philosophy.
Oh, yeah. Like what?
Well, for one thing, they've simplified all their product descriptions. They want to make sure everything is easy for customers to actually understand. And they've gotten rid of a lot of fees on their basic banking services,
Yeah.
which is pretty bold, in an industry that's known for nickel and diming people.
No kidding. I mean, who doesn't love fewer fees, right? It's definitely a breath of fresh air, for sure. And it seems to be working. They've seen a lot of growth in their customer base and their deposit base. So it looks like that focus on transparency and fairness is attracting people who are just tired of the old way of banking.
So they're putting their money where their mouth is, basically. It
Yeah.
sounds like their CEO is really serious about building a bank that's not just profitable, but ethical and customer-focused.
Yeah, he really seems to be. I mean, in the earnings call, he kept emphasizing how committed they are to doing right by their customers, even when nobody's watching. He seems really passionate about this idea of rebuilding trust in the banking system, one customer at a time.
That's a pretty powerful vision. But at the end of the day, they're a business, and businesses need to grow. So what are their plans for the future?
Well, they've got some ambitious goals for sure. They're aiming for a loan book of ours, 5 lakh crore, and customer deposits of ours, 6 lakh crore, all by FY29.
Wow, those are some big numbers. How are they planning on getting there?
Their main bet is on continuing to grow their retail banking business, plus expanding into new areas like wealth management. And of course, keeping a really tight focus on operational efficiency.
So basically, keep doing what's working and watch the pennies.
Yeah, pretty much. But they've also made it clear they're not going to chase growth at any cost. If a business is too risky or could hurt their asset quality, like microfinance, they're willing to slow down or even pull back completely.
Now that's responsible. It sounds like their strategy is working for investors too. Their stock price has held up pretty well, even with those MFI problems.
Yeah, it does seem like investors are buying into their long-term vision, and they believe IDFC First Bank can handle a tough economy.
So let's zoom out a bit here. What does IDFC First Bank's story tell us about what's going on in the financial industry as a whole?
Well, it highlights some pretty important trends. First, there's this growing demand for ethical and transparent banking. Customers are getting smarter. They're more aware of all the fees and hidden charges banks try to slip in, and they're actively looking for alternatives that actually align with their values.
Like they want a bank that's not just a bank, but a partner they can trust.
Exactly. And second, technology is becoming absolutely crucial in banking. I mean, IDFC First Bank has invested a ton in building a digital-first platform, and that's been a major driver of their growth.
So they're using technology to streamline everything, make things easier for customers, and even expand into new products.
Exactly. And what's really interesting is how they're using technology to meet those regulatory requirements, like those PSL targets we talked about. They're focused on things like two-wheeler loans. Those are really popular with a big chunk of the population. So it helps them hit those requirements while also tapping into a whole new customer base.
It's like a win-win, right? They're helping the community and growing their business. And speaking of reaching new customers, their fast tag business is another great example of how they're building that whole ecosystem.
Oh, totally. They've become the biggest issuer of FASTags in India. Over 21.5 million tags issued. That gives them access to this huge network of users and creates all these opportunities to cross-sell other products and services.
Plus, it ties into that whole digital payments trend that's exploding in India. As smartphones become more common and internet access gets cheaper, we're seeing this rapid shift towards digital payments. And IDFC First Bank seems to be in a great spot to take advantage of that.
Definitely. And they're also playing a role in the government's digitalization push. They're now authorized to collect direct and indirect taxes for the government, which gives them even more credibility and a new source of revenue.
So even though they're a relatively young bank, they're already making a pretty big splash.
Yeah, they are. And, there will be challenges. But IDFC First Bank's journey so far is a really cool case study in how to build a modern, customer-centric, and ethical financial institution. They're not afraid to take risks, invest in new ideas, and challenge how things have always been done.
Okay, so before we head to part three, let's bring this back to our listeners. We've talked a lot about how IDFC First Bank works, their values, their vision for the future. But what does all this mean for you when you're choosing a bank?
That's the million-dollar question, right? It comes down to what matters most to you. Do you want a bank that's all about transparency, fairness, and a smooth digital experience? Or are you more interested in those traditional banking services, having access to branches and a wide selection of investment products?
It's all about finding the right fit for your needs and your values.
Absolutely. IDFC First Bank might not be the perfect choice for everyone, but their story definitely offers some valuable lessons for both consumers and the banking industry as a whole.
They're really changing the game, aren't they? It's like
Yeah.
they're redefining what a bank can be.
Yeah, it's not just about offering financial products anymore. They're creating this whole ecosystem, catering to all sorts of customer needs, from payments to wealth management, even tax collection.
Like a one-stop shop for all things money.
Exactly. And that kind of convenience, that integration, it's really valuable these days, right? Everyone's so busy.
And their mobile app seems to be at the center of it all. It's gotten amazing reviews, even won some international awards.
That commitment to a top-notch digital experience is paying off, for sure.
And they've been really open about their whole journey, too, sharing both the good and the bad with investors.
Transparency builds trust, right? It helps investors make informed decisions.
And speaking of transparency, we got to talk about their CEO, Vivek Janathan. He seems to be a big part of why IDFE First Bank is doing so well.
He's a real visionary leader, totally committed to building an ethical and customer-centric bank. His leadership has been a huge factor in their success.
And he's got a pretty impressive background, too. I mean, he built this massive retail banking division at ICICI Bank, then took a chance and turned a small real estate financing company, Capital First, into this profitable lending powerhouse.
And then he merged Capital First with IDFC Bank to create what we know as IDFC First Bank today. The guy knows how to take on a challenge and win.
So what's next for IDFC First Bank? What does the future hold?
That's the exciting part, isn't it? They've built a really strong foundation for growth. They've got a clear vision, a talented team, and that commitment to doing things differently.
And they're in a market with so much potential. I mean, India's economy is growing like crazy, and there's this massive demand for financial services that's just waiting to be met.
Exactly. IDFC First Bank is in a great position to grab a big chunk of that market. But of course, there will be challenges. That whole regulatory landscape is complex and always changing. They've got competition from those big established players, and they'll need to keep innovating to stay ahead of the curve.
It won't be easy, that's for sure. But they seem up for the challenge.
Well, as we wrap up this deep dive into IDFC First Bank, we'll leave you with a final thought.
In this world where technology is changing everything about finance, what role will traditional banks like IDFC First Bank play?
Will they adapt? Will they evolve to meet the needs of their customers?
Or will they get disrupted by these new players with their fancy new business models?
It's a question worth thinking about. As you figure out your own finances, pay attention to how the banking world is changing and what role institutions like IDFC First Bank play in shaping its future.
Thanks for joining us on this deep dive. We hope you found it helpful and interesting.
Yeah, until next time, keep exploring and keep learning.